Based on the historical data and forecast, Bitcoin shows a fluctuating trend with periods of consolidation and upward movement. The support price consistently remains at $108,400, while the resistance price has varied. The RSI values, generally between 40 and 50, suggest that the asset is neither significantly overbought nor oversold. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper or lower bands. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands. The strategy will involve a combination of long and short positions based on RSI and Bollinger Band signals. For a long position, we will enter when the RSI falls below 30 near the support price of $108,400, with a stop loss at $107,700 and a target price of $112,300. For a short position, we will enter when the RSI rises above 70 near the resistance price of $110,600, with a stop loss at $111,000 and a target price of $108,400. The forecast data for the next week indicates a slight downward trend, so prioritizing long positions when RSI is oversold near the support level is recommended. This blended approach aims to capitalize on both momentum and volatility, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum has shown volatility, with support at $37.90 and resistance at $41.60. The RSI indicates periods of oversold and overbought conditions, fluctuating between 39.6 and 53.2. The Bollinger Bands have widened, suggesting increased price volatility. Given this analysis, I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels to maximize returns. The strategy will involve a long position when the RSI falls below 40, near the support level of 3,790, and a short position when the RSI exceeds 70, near the resistance level of 4,160. For a long position, enter at $3,790, set a stop loss at $3,700, and target a price of $4,160, capitalizing on the potential bounce from the support level and the overall upward trend. For a short position, enter at $4,160, set a stop loss at $4,220, and target a price of $3,790, leveraging the potential pullback from the resistance level. The forecast data suggests a slight downward trend in the short term, further reinforcing the need for caution and tight stop losses. Combining these three strategies, the most efficient portfolio would involve a 60% allocation to the long position and a 40% allocation to the short position, dynamically adjusting based on real-time market conditions and RSI readings. Based on the historical data and forecast, XRP exhibits a slight upward trend. The price has been fluctuating between a support of $2.44 and a resistance of $2.6. The RSI values hover between 37.5 and 52.6, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Considering these factors, I recommend a long position strategy. The entry price will be $2.47, coinciding with the forecast price on November 9, 2025, and the lower Bollinger Band. The stop loss will be set at $2.44, just below the support level, to limit potential losses. The target price will be $2.6, aiming to reach the resistance level. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it's a strong buy signal. Conversely, when the RSI exceeds 70, indicating an overbought condition, and the price touches the upper Bollinger Band, it's a sell signal. Given the current conditions, I would enter a long position at $2.47, set a stop loss at $2.44, and target $2.6. If the price reaches $2.6, consider taking partial profits and moving the stop loss to break even to protect gains. This combined approach leverages both momentum and volatility indicators for a more robust trading decision. Based on the historical data and forecast, BNB has been fluctuating within a range between $10.70 and $11.30. The RSI indicator consistently remains between 45 and 53, suggesting a neutral market condition without strong overbought or oversold signals. The Bollinger Bands have been narrowing, indicating decreasing volatility. The forecast for the next week shows a slight downward pressure, with prices hovering around $1,070 to $1,100. Therefore, I recommend a cautious strategy focusing on short-term gains. My strategy is to implement a range trading approach with a focus on the support and resistance levels. We will enter a long position at $1,080, placing a stop-loss order at $1,070 to protect against a potential breakdown. The initial target price will be $1,100, aiming for a quick profit within the established range. If the price reaches $1,100, we will reevaluate the market conditions and adjust the strategy accordingly. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at the bottom of the Bollinger Bands, around $1,030, with a stop-loss at $1,000 and a target price of $1,100. This combined approach leverages both range trading and RSI signals for optimal returns. Based on the historical data and forecast, Solana shows a downtrend with decreasing forecast prices. The RSI indicates that the asset is currently in the neutral range, fluctuating between 41 and 50. However, the recent dip towards $184, the support level, coupled with the forecast price consistently below $187, suggests a potential for further downside. Therefore, I recommend a short selling strategy. Entry price should be $186, with a stop-loss set at $187 to protect against unexpected price spikes. The initial target price is $184, aligning with the established support level. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently trading near the lower band reinforces the downtrend. If the price breaks above $187, it signals a potential trend reversal, triggering the stop-loss. If the price reaches $184, take partial profits. For a more aggressive approach, consider a second target price of $182, based on the forecast data. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the current downtrend while mitigating risk through strategic stop-loss and target levels. Based on the historical data and forecast, TRON has been in a downtrend, consistently testing the support level of $0.292. The RSI has been consistently below 50, indicating a weakening momentum. The forecast for the next week shows a continued sideways movement around $0.294 to $0.298. Considering these factors, I recommend a cautious strategy focusing on potential short-term bounces. We will employ a strategy based on the RSI indicator, aiming to capitalize on brief periods of oversold conditions. The entry price will be $0.294 when the RSI dips below 30. The stop-loss will be set at $0.288 to protect against further downside. The target price will be $0.308, aiming for a quick profit as the price retraces towards the center of the Bollinger Bands. To further refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band of $0.286, it signals an oversold condition, strengthening our entry signal. If the price closes above the upper Bollinger Band of $0.329, it indicates a potential shift in momentum, and we will consider closing our position and re-evaluating the trend. The overall portfolio will be 60% allocated to this strategy, 30% to a conservative holding strategy, and 10% to a diversified portfolio. This approach balances potential high returns with risk management, aligning with a Wall Street investment expert's perspective. Based on the historical data and forecast, Dogecoin exhibits a downtrend. The price has been consistently declining from $0.2 to $0.186, and the forecast predicts further decrease to $0.175. The RSI consistently remains below 50, with values fluctuating between 37.6 and 47.5, suggesting a weakening momentum. The Bollinger Bands indicate increased volatility, with the lower band consistently approaching the support level of $0.182. Therefore, a short position strategy is recommended. My strategy is to short Dogecoin at $0.186. The stop-loss price will be set at $0.196, just above the upper Bollinger Band, to protect against unexpected price surges. The initial target price is $0.175, aligning with the forecasted price. If the price reaches $0.175, we will move the stop-loss to $0.182, the support level, to secure profits and minimize potential losses. If the price continues to decline, we will adjust the target price to $0.178. This strategy combines the downtrend analysis, RSI readings, and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Wrapped Beacon ETH has been fluctuating within a range between $4,100 and $4,290. The RSI readings indicate periods of oversold and overbought conditions, with values frequently dipping below 45, suggesting potential buying opportunities. The Bollinger Bands show a contraction in recent days, indicating a potential breakout. Considering the forecast for the next week, which predicts a downward trend with prices ranging from $4,230 to $4,090, I recommend a short position strategy. My strategy involves entering a short position at $4,230. Given the support level at $4,100, I will set a stop-loss order at $4,290 to limit potential losses. The target price will be $4,090, aligning with the lowest forecast price for the week. This strategy combines the downward forecast with the support and resistance levels and RSI readings. The portfolio will be 60% short position, 20% cash, and 20% standby to buy Wrapped Beacon ETH when the price rebounds. This diversified approach balances risk and reward for potentially high returns. Based on the historical data and forecast, Chainlink exhibits a downtrend, supported by the decreasing center of the Bollinger Bands and the projected lower prices for the next week. The RSI consistently fluctuates below 50, indicating a lack of strong bullish momentum. The support price of $16.8 provides a crucial floor, while the resistance at $18.1 has been tested multiple times without sustained breakout. Considering these factors, I recommend a short position strategy. We will enter a short position at $17.5. The stop loss will be set at $18.1, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $16.7, aligning with the forecast for the next week. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 40, indicating oversold conditions, we will hold the position. If the price touches the bottom of the Bollinger Bands, which is around $16.4, we will take partial profits at $17.1 and adjust the stop loss to the entry price of $17.5. If the price continues to fall, we will aim for the support level of $16.8. This multi-stage approach allows us to capitalize on the downtrend while mitigating risks through strategic stop-loss adjustments and partial profit-taking based on technical indicators. Based on the historical data and forecast, Bitcoin Cash shows a generally upward trend, although with periods of consolidation. The RSI consistently remained below 50, indicating a prevailing bearish sentiment, but recently trending upward. The Bollinger Bands show the price has been approaching the lower band, suggesting a potential oversold condition. Considering the support price of $533 and the forecast for the next week, I propose a moderate bullish strategy. We will enter a long position at $531. The stop loss will be set just below the support level at $530 to mitigate potential losses if the price breaks down. The initial target price will be $545, aiming to capture a short-term upward movement. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI climbs above 50 and the price touches the upper Bollinger Band, we will adjust the target price to $554. Conversely, if the RSI falls below 30 and the price touches the lower Bollinger Band, we will exit the position at $533 to secure profits or minimize losses. This dynamic approach allows us to adapt to changing market conditions and optimize returns. This portfolio is efficient because it combines technical indicators and support/resistance levels for a more robust trading decision. Based on the historical data and forecast, Aptos demonstrates a slight upward trend with increased volatility. The RSI consistently remains below 50, indicating a generally oversold condition, with values frequently dipping below 35. The Bollinger Bands show significant fluctuations, suggesting periods of high price movement. Considering the support price of $3.21 and the forecast for November 9, 2025, at $3.27, a long position is recommended. The entry price should be $3.22, with a stop-loss set at $3.15 to protect against potential downside risk. A target price of $3.5 would provide a reasonable profit margin, capitalizing on the anticipated upward trend. To refine the strategy, we will incorporate the RSI and Bollinger Bands. When the RSI falls below 30, indicating an oversold condition, and the price touches the lower Bollinger Band, it signals a potential buying opportunity. Conversely, when the RSI exceeds 70, and the price touches the upper Bollinger Band, it indicates an overbought condition, suggesting a potential selling opportunity. For this strategy, we will implement a long position when the RSI is at $32.5 and the price is at the lower Bollinger Band of $2.47. The entry price is $2.47, the stop-loss is $2.4, and the target price is $3.5. This combined approach leverages both momentum and volatility indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Solana shows a downtrend with decreasing forecast prices. The RSI indicates that the asset is currently in the neutral range, fluctuating between 41 and 50. However, the recent dip towards $184, the support level, coupled with the forecast price consistently below $187, suggests a potential for further downside. Therefore, I recommend a short selling strategy. Entry price should be $186, with a stop-loss set at $187 to protect against unexpected price spikes. The initial target price is $184, aligning with the established support level. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently trading near the lower band reinforces the downtrend. If the price breaks above $187, it signals a potential trend reversal, triggering the stop-loss. If the price reaches $184, take partial profits. For a more aggressive approach, consider a second target price of $182, based on the forecast data. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the current downtrend while mitigating risk through strategic stop-loss and target levels. Based on the historical data and forecast, Solana shows a downtrend with decreasing forecast prices. The RSI indicates that the asset is currently in the neutral range, fluctuating between 41 and 50. However, the recent dip towards $184, the support level, coupled with the forecast price consistently below $187, suggests a potential for further downside. Therefore, I recommend a short selling strategy. Entry price should be $186, with a stop-loss set at $187 to protect against unexpected price spikes. The initial target price is $184, aligning with the established support level. To refine this strategy, I will incorporate the Bollinger Bands. The price consistently trading near the lower band reinforces the downtrend. If the price breaks above $187, it signals a potential trend reversal, triggering the stop-loss. If the price reaches $184, take partial profits. For a more aggressive approach, consider a second target price of $182, based on the forecast data. This combined strategy, leveraging RSI and Bollinger Bands, aims to capitalize on the current downtrend while mitigating risk through strategic stop-loss and target levels. Based on the historical data and forecast, Zcash exhibits a strong uptrend, particularly evident in the last week with consistently increasing prices. The RSI values generally hover above 60, indicating bullish momentum, and the Bollinger Bands have been expanding, confirming the trend. The forecast for the next week predicts further price increases, reaching $493. Considering these factors, I recommend a long position strategy. The entry price should be set at $413, coinciding with the start of the forecast period. A stop-loss should be placed at $404, just below the recent low of November 2, 2025, to limit potential losses if the trend reverses. For the target price, I suggest $459, aligning with the forecast peak midweek. This strategy leverages the predicted upward movement and incorporates risk management through a conservative stop-loss. The RSI nearing 80 suggests a potential for a pullback, so taking profits at $459 would be prudent. This combined approach of trend analysis, forecast data, and technical indicators provides a high probability, high return investment opportunity in Zcash. Based on the historical data and forecast, Chainlink exhibits a downtrend, supported by the decreasing center of the Bollinger Bands and the projected lower prices for the next week. The RSI consistently fluctuates below 50, indicating a lack of strong bullish momentum. The support price of $16.8 provides a crucial floor, while the resistance at $18.1 has been tested multiple times without sustained breakout. Considering these factors, I recommend a short position strategy. We will enter a short position at $17.5. The stop loss will be set at $18.1, just above the resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $16.7, aligning with the forecast for the next week. To refine the strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI dips below 40, indicating oversold conditions, we will hold the position. If the price touches the bottom of the Bollinger Bands, which is around $16.4, we will take partial profits at $17.1 and adjust the stop loss to the entry price of $17.5. If the price continues to fall, we will aim for the support level of $16.8. This multi-stage approach allows us to capitalize on the downtrend while mitigating risks through strategic stop-loss adjustments and partial profit-taking based on technical indicators. Based on the historical data and forecast, Starknet shows a decreasing trend with support at $0.116 and resistance at $0.127. The RSI fluctuates between 37.6 and 49.7, indicating periods of oversold and overbought conditions. The Bollinger Bands show a narrowing range, suggesting potential volatility. Given the forecast price decreasing from $0.12 to $0.117, a short selling strategy is recommended. We will use an RSI-based strategy with an oversold level of 20 and an overbought level of 80. When the RSI falls below 40, we will enter a short position at $0.12, with a stop loss at $0.127 and a target price of $0.102. To refine the strategy, we incorporate Bollinger Bands. If the price breaks below the lower Bollinger Band, it strengthens the short selling signal. Therefore, we will adjust the entry price to $0.119 when the price touches the lower Bollinger Band. The stop loss remains at $0.127 to protect against unexpected upward movements. The target price is set at $0.102, aiming to capitalize on the anticipated downward trend. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Aave shows a slight upward trend with periods of consolidation. The RSI consistently below 50 indicates a generally weak upward momentum. The forecast data suggests a continued sideways movement with potential for slight downward pressure. Considering the support price of $215 and the resistance price of $273, we will implement a strategy combining RSI and Bollinger Bands. We will initiate a long position when the price touches the lower Bollinger Band and the RSI is below 40, signaling a potential oversold condition. Specifically, we will enter a long position at $218 plus $0 when the price touches the bottom Bollinger Band and the RSI is below 40. Our stop loss will be set at $215 plus $0, just below the support level, to protect against significant downside risk. The initial target price will be $225 plus $0, aligning with the forecast price range. If the price breaks through $225 plus $0, we will adjust the target price to $231 plus $0, based on the recent historical high. This strategy combines technical indicators and support/resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Internet Computer shows a clear upward trend. The price has been consistently rebounding from the support level of $3, and the recent price action indicates a strong bullish momentum. The RSI values have been oscillating, but generally trending upwards, with a significant jump to 63.6 on November 2, 2025, suggesting strong buying pressure. Furthermore, the forecast for the next week projects continued price increases, reaching $4.01 on November 9, 2025. Considering these factors, I recommend a long position strategy. Entry price should be $3.39, with a stop-loss placed at $3, just below the established support level. The initial target price should be $3.77, aligning with the forecast for November 9, 2025. To refine this strategy, we will incorporate the Bollinger Bands. The price is currently near the center band, and the forecast suggests it will move above the upper band. Therefore, we should maintain a long position and adjust the target price upwards. If the price reaches $3.77, we can consider taking partial profits and setting a trailing stop-loss to protect gains. If the price breaks below the $3 support level, it signals a trend reversal, and we should immediately exit the position to minimize losses. The final target price should be $4.01 based on the forecast, but we should remain vigilant and adjust the strategy as needed based on real-time market conditions. Based on the historical data and forecast, ZKsync has shown significant volatility. The RSI consistently remained below 30 for most of the period, indicating an oversold condition. However, the recent surge on November 2, 2025, with an RSI of 72.2 suggests a potential shift in momentum. The Bollinger Bands also reflect this volatility, with the price frequently touching both the upper and lower bands. Considering the forecast data, which predicts a steady increase over the next week, I recommend a buying strategy. We will enter a long position at $0.0443, placing a stop-loss at $0.0373 to protect against a potential downside reversal. The initial target price will be $0.0519, based on the recent high and the upper Bollinger Band. To refine this strategy, we will incorporate an RSI-based exit point. If the RSI reaches 80, we will take partial profits and move the stop-loss to break even. The final target price will be $0.0634, aligning with the forecast peak and the upper Bollinger Band. This approach combines the trend-following nature of the Bollinger Bands with the momentum signals from the RSI, aiming to maximize returns while managing risk. The portfolio will allocate 60% of capital to this long position, 30% to cash for flexibility, and 10% to a short position on a related altcoin to hedge against broader market downturns. Based on the historical data and forecast, Dash exhibits a strong upward trend. The price has consistently broken through resistance levels, and the forecast indicates further gains. The RSI consistently moves above 50, with spikes above 70, suggesting bullish momentum. The Bollinger Bands are expanding, confirming the increasing volatility and upward trend. Considering these factors, I recommend a long position strategy. We will enter a long position at $71.2, coinciding with the first forecast price. The stop-loss will be set at $68.2, slightly below the forecast price to account for minor pullbacks. The initial target price will be $81.3, aligning with the forecast price for November 5, 2025. To maximize potential returns and manage risk, we will implement a dynamic target price strategy. As the price approaches $81.3, we will move the stop-loss to break even, protecting our initial investment. If the price continues to rise, we will adjust the target price upwards, aiming for $94 on November 7, 2025. If the price reaches $94, we will take partial profits and move the stop-loss to a higher level, such as $90, to capture further gains if the upward trend continues. This strategy combines the momentum of the upward trend with risk management techniques to achieve high returns while protecting capital.